Picture this. You sit in front of your screen, watching the candles dance up and down, red and green flashing like traffic lights in the night. Your strategy is written down, your rules are clear, your stop-loss and target are already set. On paper, everything looks perfect. But then the market begins to move against you. The red candle stretches lower, your heart starts to pound, and suddenly logic disappears. Fear kicks in. You think, maybe I should close this trade early just to be safe. In that moment, it's not about your system anymore. It's about your emotions. And this is the brutal truth. Most traders don't fail because of their strategy. They fail because they can't control themselves. The market is not your enemy. It doesn't care if you win or lose. It doesn't even know you exist. The real enemy lives inside you. Fear, greed, impatience, overconfidence. These emotions are silent assassins that destroy more trading accounts than bad strategies ever could. You can be the smartest trader in the world, but if you can't master your emotions, you'll never last long enough to let your skills work. That's why trading is not just about charts, it's about psychology. So let me ask you a question. Who is really in control when you trade? The disciplined strategist who wrote down the plan, or the impulsive gambler who takes over the moment real money is at risk? Every trader must answer this question, and the truth is painful. Most are not in control. They think they are. They believe they have discipline. But the second the market tests them, their emotions hijack the wheel. Think about the last time you moved your stop-loss because you just knew the market would turn back. Or the last time you closed a winning trade too early because you were afraid it would reverse. Or maybe you added to a losing trade out of frustration, thinking, I'll double down and get it back. These are not strategy decisions. These are emotional decisions. And every emotional decision moves you closer to blowing up your account. Here's the paradox of trading. The charts, the indicators, the news, they don't decide your future. You do. Not with your intelligence, not with your predictions, but with your ability to master yourself. Trading is less about predicting the market and more about predicting your own reactions. The market is neutral. It goes up, it goes down. It doesn't care. But your reactions? Those determine everything. Fear is the first enemy. Fear makes you exit winners too early. It whispers, take the money before it disappears. It convinces you that protecting tiny profits is more important than following your plan. But here's the reality. Fear doesn't protect you. It robs you. It robs you of the big winners that could have changed your account. Fear makes you safe in the short term, but broke in the long term. Then comes greed. Greed makes you hold losers too long. It whispers, just a little more, it will come back. Don't close now. Greed makes you move your stop-loss further and further, hoping the market will turn around. But the market doesn't care about your hope. It punishes greed with brutal precision. What could have been a small, manageable loss becomes a disaster because you couldn't let go. And then there's impatience. Impatience is the silent killer of trading accounts. It pushes you into trades that never matched your rules. It convinces you that sitting on your hands is wasting time. But in reality, waiting is a weapon. The professional trader knows that doing nothing is sometimes the most profitable action. The amateur cannot stand the silence. They need action, so they chase every flicker on the screen, and they bleed slowly, trade after trade. Finally, there's overconfidence. This one is deadly because it disguises itself as strength. After a winning streak, you start to believe you are untouchable. You risk more. You break your rules. You think the market will bend to your will. But the market has a way of humbling every trader. Overconfidence is the setup for your biggest losses because it blinds you to risk. These four enemies, fear, greed, impatience, and overconfidence, are the real bosses of trading. Beat them and you survive. Lose to them and you fail. And here's the key. You don't beat them with intelligence. You beat them with discipline. You beat them with rules. You beat them with a mindset that refuses to let feelings make the decisions. Think about casinos. Why do they always win in the long run? It's not because they win every bet. It's because they stick to probabilities, to math, to discipline. The gamblers lose because they let emotion run wild. Trading is no different. You either trade like the casino or you trade like the gambler. Which one are you? Now imagine two traders sitting side by side, looking at the same chart. The first sees a red candle and panics. He closes early, regrets it instantly, and watches the market hit his original target. The second sees the same red candle but stays calm. He trusts his stop-loss, trusts his rules, and hours later he hits his profit. Same chart. Same setup, two completely different results. The difference is not the market, it's the mindset. And here's the hard truth. You don't rise to the level of your strategy. You fall to the level of your discipline. Let's dive deeper into the battlefield of emotions, because trading is not a game of charts. It's a game of patience and self-control. Imagine this. A trader waits all week for a setup, finally sees something close to what he wants, and jumps in too early. He tells himself, it's almost right, I don't want to miss it. But almost is never good enough. The market punishes almost. Within minutes, the trade goes against him. He feels the sting of regret. Now his emotions double down, frustration, anger, the desire to get it back. That's when revenge trading begins. He takes another trade and another, faster and faster, each one worse than the last. By the end of the day, his account is wrecked. What destroyed him? Not the market, his own impatience. Patience feels like doing nothing, and for most traders, doing nothing feels wrong. Our brains are wired for activity. In most jobs, the harder you work, the more results you get. In trading, that logic kills you. The most profitable action is often waiting. But waiting feels empty. It feels like wasted time. So traders jump in, desperate for action, desperate for the dopamine hit of being in the market. And that's exactly why most accounts vanish. There's a story about a trader who gave himself a strict rule, no more than 4 trades per month. Think about that, only 4. At first, people thought he was crazy. They mocked him, saying he wasn't a real trader. But he knew his edge only appeared a handful of times each month. So he waited. One month he sat for 23 days without taking a single trade. People laughed. But on day 24, the setup appeared, perfect in every detail. He struck. That one trade made more money than his impatient friends made in the entire month combined. The lesson is brutal but clear. If the market will still be here tomorrow, why should you rush today? Patience is not passive, it's active. It's the discipline to watch, to wait, to resist temptation when opportunity seems close but not perfect. It's the strength to sit with boredom, to feel the itch to trade and ignore it. Patience is the invisible edge that separates professionals from amateurs. Amateurs chase, professionals stalk. Like a lion hiding in the tall grass, the professional trader doesn't waste energy chasing every shadow. He waits until the prey is close enough for a clean kill. Now let's talk about resilience, because patience is nothing without the ability to handle losses. Losses are not proof you're bad. Losses are not proof the market hates you. Losses are simply part of the game. Think of them like the cost of running a business. A restaurant expects food waste. A store expects theft. A trader must expect losses. They are baked into the system. What destroys traders is not losing. It's how they respond to losing. A disciplined trader sees a loss and shrugs. He reviews it, learns from it, and moves on. An emotional trader sees a loss and feels pain. He takes it personally. He thinks, I'm not good enough. I need to make it back now. That emotion turns a small, manageable loss into a spiral of destruction. Revenge trading is one of the fastest ways to blow up an account because the decisions are no longer based on logic. They're based on anger. But here's the truth. 1 loss means nothing. 10 losses mean nothing. What matters is the bigger picture, the curve of consistency, the discipline to stay in the game long enough to let probabilities play out. Professionals don't care about the outcome of 1 trade. They care about the outcome of the next 100 trades. There's a famous saying, no single trade will make you rich, and no single trade will make you poor. Let that sink in. Every time you risk too much on 1 trade, every time you chase losses, you are betting your entire future on a single coin flip. Professionals never do this. They know the secret. The game is not about winning big, it's about not losing big. Protecting your capital is more important than multiplying it. Think of your account as a seed. We talked about this before, but it's worth repeating. You don't dig up a seed every day to check if it's growing. You don't stomp on it out of frustration. You water it, you protect it, you wait. That's trading. Every reckless trade is like digging up the seed. Every revenge trade is like pouring poison on it. Every moment of patience is like sunlight helping it grow. Now let's shift to comparison, because in today's world, traders are poisoned daily by social media. Scroll through Instagram, TikTok, or YouTube, and you'll see endless posts of people turning $500 into $5,000 in a week. Screenshots of profits, flexing luxury cars, exotic vacations. And the message is clear. If you're not doing this, you're failing. But here's the truth behind the curtain. Most of those traders are gambling. They take insane risks. They bet their entire accounts on one trade. And yes, sometimes they get lucky. But the accounts you see winning big one week are often the same accounts that blow up the next week. The only thing they don't post is the wreckage. The compounding mindset protects you from this poison. It reminds you that your journey is your journey. Your pace is your pace. The market doesn't care what someone else posted online. It only cares about your discipline, your patience, your ability to follow rules. Comparison is a trap that makes you feel inadequate, but it's built on lies. Real traders don't flex screenshots, they build track records. Imagine two runners in a marathon. One is sprinting, showing off in the first mile, waving to the crowd, posting selfies. The other runs quietly, steady, saving energy. At mile 20, the sprinter collapses. The quiet runner keeps going, crosses the finish line, and wins. That's trading. Social media shows you the sprinters. Reality rewards the marathon runners. This is why patience and discipline feel boring, but they are powerful. The boring trader survives. The boring trader compounds. The boring trader becomes free. The exciting trader, the one who chases action, who brags about big wins, who over-leverages, becomes broke. And here's the brutal irony. Most traders would rather be entertained than be profitable. They treat trading like a casino. They crave excitement, adrenaline, the roller coaster of highs and lows. But professionals treat trading like a business. They crave consistency, control, and boring, repeatable actions. The boring path is the wealthy path. The exciting path is the broke path. So let me ask you again, are you trading to be entertained, or are you trading to be free? Let's move into one of the most dangerous traps in trading, overconfidence. Unlike fear, greed, or impatience, overconfidence feels good. It makes you feel powerful, unstoppable, like the market is finally yours to command. It usually appears after a winning streak. You follow your plan, you hit a series of wins, and suddenly you start to think, maybe I don't need these rules anymore. Maybe I can risk a little more. Maybe I've figured it out. That is the exact moment the market humbles you. Overconfidence is a silent assassin because it blinds you to risk. It tricks you into believing you are bigger than the market, but the market is always bigger than you. The moment you stop respecting it, it will take everything back. How many times have traders doubled their position size after a series of wins, only to lose it all in one trade? The discipline that built their small wins vanishes, and their ego destroys them. Here's the paradox. The very discipline that creates success often becomes boring once success arrives. Traders get restless. They want more excitement. They want bigger gains. They forget that the boring rules are what kept them alive in the first place. And then they break those rules, and the spiral begins. Discipline is not a one-time choice. It is a daily decision. Every morning you sit at your desk, the market asks you the same question. Will you follow your rules today, or will you follow your emotions? The traders who answer rules again and again are the ones who survive. The ones who answer emotions are the ones who quit. Think about pilots. When turbulence hits, they don't start improvising. They don't let fear or arrogance take control. They trust their training, their systems, their checklists. They stick to discipline because lives are on the line. Trading is no different. Your financial future is on the line. And yet, how many traders throw their checklists out the window the moment things get uncomfortable? Now let's talk about clarity, because discipline without clarity is impossible. If your rules are vague, if your system is not crystal clear, your emotions will always sneak through the cracks. You'll convince yourself that close enough is good enough. You'll bend the rules because they were never firm to begin with. That's why professionals write their rules with precision. They know exactly what a valid setup looks like, exactly how much they risk, exactly where they exit. There is no room for interpretation. Clarity breeds confidence, and confidence fuels discipline. One mentor in Chicago once told his student, "If you can stand here all day and make 0 trades, you're ready to be a pro." At first, the student laughed. Why be a trader if you don't trade? But after blowing his account twice, he understood. The lesson wasn't about avoiding trades forever. It was about avoiding bad trades, about rejecting the urge to act just to feel busy. He learned that sometimes the most profitable decision is no decision at all. But let's face it, discipline feels heavy. It feels restrictive. It feels like you're constantly saying no to yourself. And that's why so many traders break. They crave freedom, but discipline feels like chains. Here's the secret. Discipline is not chains. Discipline is the key that unlocks freedom. Because once your rules are second nature, once you've mastered your emotions, trading becomes lighter, easier, less stressful. You no longer argue with yourself. You no longer battle impulses. You simply follow the plan, trade after trade, and let the results accumulate. That's when trading stops being chaos and starts being harmony. Now we arrive at the final pillar, adaptation. Even with compounding, patience, and discipline, no trader can survive without adaptation. Why? Because the market is alive. It changes constantly. What worked yesterday may not work tomorrow. The moment you think you figured it out forever, the market shifts and punishes your arrogance. Adaptation is survival. In nature, the strongest animals don't always survive. The fastest don't always survive. The ones who survive are the ones who adapt. Dinosaurs ruled the earth for millions of years, but when the environment changed, they disappeared. Smaller, weaker species survived because they adapted. Trading is no different. The rigid trader, the one who clings to a single method no matter what, eventually dies out. The adaptive trader, the one who evolves with the market, thrives. Think about the 2008 financial crisis. Entire banks collapsed. Traders who refused to adapt lost everything. But those who embraced the chaos, who shifted to shorter time frames, who adjusted their risk, didn't just survive, they thrived. They made fortunes, not because they predicted the crash perfectly, but because they adapted faster than everyone else. Adaptation is not about changing your core principles. Risk management, patience, discipline, those never change. Adaptation is about changing the tools, the strategies, the execution. It's about recognizing when the environment shifts and moving with it, not against it. The adaptive trader is like water. Water has no shape, but it adapts to every shape it enters. It bends, it flows, it finds a way around every obstacle. Be like water and you will survive. But adaptation also means adapting to yourself. Some days you are sharp, focused, unstoppable. Other days you are tired, distracted, emotional. The rigid trader forces himself to trade the same way every day, regardless of his state. The adaptive trader recognizes his condition. On bad days, he lowers risk, trades less, or walks away entirely. He adapts not just to the market, but to himself. That is what separates professionals from gamblers. Marty Pitbull Schwartz, a legendary trader, built his reputation not just on skill, but on relentless adaptation. He reinvented himself again and again, studying new markets, testing new strategies, reshaping his risk. Every stage of his career, he became a new version of himself. That's why he lasted while others disappeared. His edge wasn't just knowledge, it was evolution. And here's the truth. Adaptation feels uncomfortable. It always does. Your brain craves routine, familiarity, the comfort of old methods. But in trading, comfort is deadly. The moment you get comfortable, you stop evolving. The market moves on, and you are left behind. Adaptation means embracing discomfort. It means testing new tools before you need them. It means reinventing yourself before the market forces you to. So ask yourself this: Are you rigid, clinging to old habits, or are you fluid, willing to adapt as many times as necessary? Let's bring it all together. You've seen how fear, greed, impatience, and overconfidence can destroy traders. You've seen how discipline, patience, and adaptation can save them. But there's one final truth you must understand. Trading is not about conquering the market. The market cannot be conquered. It is bigger than you, bigger than me, bigger than all of us combined. The goal is not domination. The goal is harmony. Harmony means moving with the market, not against it. It means flowing like water, adapting to every condition, surviving storms, and thriving in calm seas. It means understanding that the market owes you nothing. It doesn't reward hard work alone. It doesn't reward emotions. It doesn't reward stubbornness. It rewards discipline, patience, and adaptability. It rewards those who stay long enough to let probabilities work in their favor. Think of it like sailing. The wind doesn't care about your plans. It blows where it wants. A stubborn sailor who refuses to adjust the sails will be destroyed. But a wise sailor moves with the wind, adapts to its changes, and uses it to reach his destination. That's trading. The market is the wind. You are the sailor. Your survival depends on how well you adjust. So let's look at the 4 pillars again. Compounding, patience, discipline, and adaptation. Compounding teaches you to think long-term, to see your small account as a seed instead of play money. Patience teaches you to wait for the right setups, to embrace boredom, to strike only when the odds are stacked in your favor. Discipline teaches you to follow rules over emotions, to respect risk, to trust your plan. And adaptation teaches you to evolve with the market, to reinvent yourself, to flow like water. Miss one pillar and your foundation crumbles. Master all 4 and you become unshakable. Here's the beauty of these pillars. They scale with you. The habits you build with $100 account are the same habits that protect a $10,000 account or a $100,000 account. If you gamble with $100, you will gamble with $100,000. If you respect $100, you will respect $100,000. Your account size doesn't determine your future. Your discipline does. Now let's confront another reality. Trading is a mirror. It doesn't just show you the market, it shows you yourself. Your weaknesses, your impatience, your lack of discipline, they all appear on the screen. Every decision you make in trading reflects who you are. And that's why so many traders struggle. It's not that they lack knowledge. It's that trading forces them to face truths about themselves they don't want to see. But here's the opportunity. Trading is also a teacher. It teaches you patience. It teaches you discipline. It teaches you emotional control. It shapes you into someone who can stay calm under pressure, who can make rational decisions when everyone else is panicking, who can delay gratification when the world screams for instant results. These are not just trading skills. They are life skills. Master them here, and they will serve you everywhere. Let me give you one more image. Picture a lion in the grass, waiting silently. Hours pass. The herd moves closer. He doesn't rush. He doesn't panic. He doesn't chase every shadow. He waits for the perfect moment. And when it comes, he strikes with precision and power. That is how you must trade. The impatient trader is like a lion chasing butterflies, exhausted, starving, dying. The patient trader is the lion who waits, who survives, who wins. Or think of water. Water is patient. It doesn't break rocks with force. It wears them down over time. It flows around obstacles, adapts to containers, and never resists the path. Water is soft, but it is also unstoppable. That is the adaptive trader, flexible, resilient, eternal. Every legendary trader understood this. Richard Dennis built fortunes not by gambling, but by compounding. Warren Buffett built billions not by rushing, but by waiting. Marty Schwartz thrived not by clinging to old ways, but by reinventing himself again and again. Their secrets were not indicators. Their secrets were not holy grails. Their secrets were patience, discipline, and adaptation. And those secrets are available to you right now. So the next time you stare at your screen and feel fear in your chest, greed in your mind, impatience in your hands, or overconfidence in your voice, stop. breathe. Ask yourself one simple question. Am I about to trade my plan, or am I about to trade my emotions? The answer to that question will decide your future. Remember this: one trade will not make you rich. One trade will not make you poor. But your habits, your discipline, your mindset, they will make or break you. The market will test you. It will push you to your limits. It will whisper temptations and scream threats. Most traders will fall. They will chase quick riches. They will gamble. They will ignore discipline, and they will vanish. But you don't have to. You can be the one who survives. You can be the one who compounds. You can be the one who adapts. And when you do, something incredible happens. Trading stops being chaos. It stops being stress. It becomes freedom. Not freedom from losses, you will still lose. Not freedom from difficulty, you will still struggle. But freedom from fear. Freedom from desperation. Freedom from the emotional chains that keep most traders stuck. That is the true reward. So here's my final challenge for you. Stop thinking about how fast you can grow your account. Start thinking about how long you can protect it. Stop chasing fireworks. Start planting seeds. Stop gambling like a tourist in a casino. Start compounding like a professional building a fortune. Because in the end, trading is not about money. Money is just the scoreboard. Trading is about mastery. Mastery of yourself. Mastery of patience, of discipline, of adaptation. And once you have that mastery, the money will follow. So ask yourself right now, are you ready to master yourself, or will you keep letting your emotions master you? The choice is yours. The market is waiting, and it will reward only those who are ready to evolve. If this message resonated with you, if it opened your eyes, then don't let it stop here. Subscribe now, because this channel is not about hype. It's about truth. It's about building traders who survive, who thrive, and who find freedom where others find failure.